Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
I want you to study this chart. This is a seasonal tendency of the last 10 years in the euro currency. Now again, back in August when I was invited to speak for the ISE and did a presentation, and you certainly can go back and register to look at the recording, we went over the seasonal pattern of the euro currency and how traditionally it has a tendency, if you notice here, to have a mid-season peak around June or July. Notice that it usually has a seasonal bottom right around the third week of October. Very interesting information. Also, notice that it generally tends to rally from approximately the third week of October going into about or before the first week of January. So understanding this pattern will help you to identify the major trend of the market conditions. With the euro currency, if you had information, and again, some years you're going to have bigger moves than others, and some years the market's not going to move. But over time, over average, if you notice that there is this seasonal pattern or a tendency for the market to move this way, then at least you know that after the market's had a tremendous sell-off, and you could realize or come to realize that, wait a minute, it's the middle of October and the market's down. I probably shouldn't be selling right now. I should be looking for buying opportunities or covering short positions and looking for buy signals. And that way you can become prepared for an eventual market reversal. So understanding seasonals puts the law of averages on your side and doesn't make you blind to this. The interesting thing is, I had just returned from Singapore where I gave a presentation to approximately 450 to 500 traders. And some were individuals, some were retail, and there were a few professional hedge funds and some banking institutions that were attending this conference. I went over this, and before I even began, I said, how many in the audience are familiar with seasonality in the foreign currency markets? And about 3 people raised their hand. And out of the 3, 2 of the people had heard about seasonalities from a webinar that I had conducted prior to going to Singapore. What was interesting is that out of that many people, you would think that someone would say, hey, I'm trading in the markets day in, day out. I know everything there is about my business. After all, if you're a brain surgeon, you go to school for this information. You go to school to learn. If you're a lawyer, you go to school to learn. You pretty much know as much as possible about your field or your career. People put money on the line. They really don't have an idea of everything they need to know about the markets, and they expect to win. Well, the law of averages, if you're ill-prepared for the markets, can work dramatically against you. They can work against you if you're really prepared, but let alone if you're not really prepared for the markets. You really have a hard time in this business, especially with knowing that we're not just trading in normal circumstances and normal times. We're trading against individuals, banks, institutions, multi-conglomerate corporations, as well as governments moving funds from one side of the pond to another. And that certainly is the case right now. But as you see, we have a tendency to rally. Why does this occur? Well, in the case of the euro currency, why do we rally from October into the 1st of January? Well, first off, it's the end of the fiscal year, number one. Number two, we also see multi-conglomerate U.S. corporations will shift funds around as they adjust for year-end situations. Now, when I did the presentation, what was interesting is you were looking at the chart, exact chart that I used back in August, and I said, listen, seasonally speaking, this market peaks out in or around June and July. Interestingly enough, we had a major double top in the euro currency as this chart shows, and I depicted this arrow going down. As you can see, this was done at the end, 7/31 of 08. This was July, so this was mid-August when I took this snapshot of this chart that you're looking at. And it was mirroring and telling and explaining, listen, folks, and I'll go back to the seasonality. In August, the market has a tendency to make a small spike, so look for that, and look for a seasonal decline going into the middle to the end of October. So, as you are probably, as a foreign currency trader, aware, the euro currency has obviously gone substantially lower since that time. So now it's a good time to maybe practice or prepare. If you're not yet trading, then practice strategies, bullish strategies going forward for a year-end rally in the euro currency. And if you are trading, perhaps this is the time to implement more bullish to bullish neutral strategies, option strategies. But just to review with you, the euro currency is quoted usually in terms against the US dollar. There are other pairs that you can trade. You can trade the euro-yen, but we're trading here with the ISE, the euro currency, which is quoted the US dollar versus the euro. You will see quotes, and the media will talk about the euro as it's quoted against the dollar. We're doing the dollar against the euro, and I'll explain that in a minute. But we can go back even further in time than the 10-year historic average that I showed you by taking a combination of prices from the German Deutschmark, the French franc, and the Italian lira and get to reflect a historic theoretical value. And that can go back to as early or as late as 1972. We have data from 1972 on those markets because in the currency arena, the first exchange, the central marketplace to give quotes to find out where currencies were trading was through the futures markets as it was introduced back in 1972. So we do have historic data that goes back a pretty long way. Now, that's important information because when we're going to try to tie down looking at seasonalities, I want to find out, because the world has changed a lot since 1972. I'm sure you'd agree with me there. Not to mention, the Beatles kind of disbanded, the Grateful Dead's no longer around, and country music is really rock and roll. So things have really changed, not only from a global perspective, but just the world in general. We trade now with Vietnam. We were at war with Vietnam in 72. So Czech Republic, for example, was a communist country. Now they're a free society. And so things have really, really changed. And I think it's important to look at the long-term history of a product or average seasonality to more recent history. And so this is something to help you in your quest for gaining further knowledge and information. If you're going to apply seasonalities, it is best to look at the long-term trend or the long-term as far back as you can go and compare that to recent history price changes. So I would look at a 35-year or longer if you could get it compared to maybe a 7 to 10-year and shorten that up and see if the historic price tendencies seem to match up. I personally do this with several markets of interest. When it comes to, and I know this is about foreign currencies, but just to let you know, there's other seasonalities. I'm sure when you hear about them, you're going to say, oh, wow, I knew about that. Why am I not watching that? But that's what happens to trader. We get kind of like attention deficit disorder, and we get distracted from things that occur year in, year out. That's why technical analysis helps us. We can look at a chart to help us remind us real easily.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.